So what is a Ponzi scheme? Recently I did a video about this huge $1.7 billion Ponzi scheme that was just busted, one of the biggest ones in the last decade or so, definitely since Bernie Madoff, perhaps. A Ponzi scheme gets thrown around a lot in the press, and everybody might not know exactly what they're talking about, and there's other scams that aren't Ponzi schemes, and there's pyramid schemes, so let's just get to the bottom of what it is. A Ponzi scheme is named after Charles Ponzi, who was a scam artist in the late 1910s, early 1920s, who created this huge phony fund based on the artificial returns he was supposedly going to get his customers or shareholders in postal reply coupon arbitrage. It didn't really matter because he wasn't doing that, but basically there was a time where you would buy a postal from the post office to return ship from abroad a package, and in theory you could buy it in one country and sell it and cash it in another country and make a few dollars. You sort of could do that, but in scale it was impossible. When you had to go fly around and buy these thousands of, never would have worked. But it doesn't matter. On paper, it sort of made sense to an investor. So Charles Ponzi said he was going to double your money in 3 months with this postal reply coupon arbitrage. He did pay out investors this huge return, and that's why more and more money kept flooding in. The media thought it was legitimate too in the beginning, and everybody piled in. He was like a real famous investment guy out of Boston. He didn't actually invest the money this way. He just quoted this return and paid you with other investors' money if you wanted your money. And the way a Ponzi scheme works is just that. The return you are being quoted, usually a very high return, is actually paid for by your own or other investors' money unbeknownst to you. You think there's an underlying investment, and there often is not at all. Charles Ponzi didn't invent the Ponzi scheme, believe it or not. That scheme goes back to the dawn of money, but he was the one who's the most famous and one of the largest ones at the time. And now the name stuck. If there was never a Charles Ponzi, they probably would call it a Madoff scheme. Anyway, the Ponzi scheme that was busted a few days ago was a kind of a semi-Ponzi scheme in that there was underlying investments, but they didn't return the 8% that was promised, a regular payout with additional bonus payments. Because an 8% fixed return is almost impossible to deliver without a high degree of risk that would make it not very fixed, the return. So they would augment the return. Maybe the investments were doing 2, 3, 4%. They would just use other investor money. It's actually called return of capital in the business, and in some cases it can be legal. It was even disclosed in filings that they might do that, but it was done in a way that the investors didn't know, and they thought it was an actual return, and that is why it was a Ponzi scheme. It wasn't a pure Ponzi scheme like Bernie Madoff, where the returns were completely a fabrication and all the returns were other people's money. But the semi-Ponzi scheme is actually a very common scheme and goes on for, if it's done right, can go on for decades, because you're not actually doubling someone's money every 3 months. It's just a 2 or 3% augmentation of a return. This is all different than a pyramid scheme, which you might have heard. A pyramid scheme is like a chain letter. They're similar but different. A pyramid scheme is where, like, the most obvious case is I'm going to send 10 letters out, and those letters, everyone has to send me $1, and then you have the right to send to 10 people, and they're going to send you $1, and the money's going to keep flowing up the tree. And as long as the pyramid grows, everybody's happy, except at some point the people at the bottom are going to be out $1 and they're going to have nothing. Pyramid schemes are illegal. However, it's a very common type of a scheme, because most multi-level marketing operations are basically pyramid schemes. The way they make them legal is they try to sell an underlying good or service, be it makeup or vitamins, for example. There's a well-known potential MLM pyramid scheme is Herbalife. There's a famous hedge fund manager who was short Herbalife for a long time and tried to prove that it was a pyramid scheme. The government didn't agree. The company still operates. There seems to be enough underlying business taking place where the concept of paying money to the top for distributorships essentially is basically legal. So one thing you want to watch out for is what is the business organization you're setting up or buying into. Is it basically a pyramid scheme? Even though it could be legal, it doesn't mean it's going to be a good investment. But a Ponzi scheme is a phony return paid for with your own money, or partially your own money, or other investors' money. The return is basically fiction. The underlying return is zero or significantly less. And to watch out for that, you want to watch out for as an investor, because these pitches are made all the time. basically artificially high fixed returns, yields 6, 8, 9% in a world where safe bonds yield 1 to 2% and risky bonds only pay 4% today typically. So to earn 8, 9, 10% guaranteed or semi-guaranteed or fixed is already going into potential Ponzi scheme territory. The less you know about the underlying investment, if you're in a brokerage account, you can see the stocks paying the dividends, one thing, but when it's like a opaque limited partnership, potentially with bogus financials that are not audited, you just don't know what's going on and you might be in a Ponzi scheme. Typically, if it's too good to be true, and too good to be true today is not double your money in 3 months, Charles Ponzi era, it can be 8% returns guaranteed in a year. That's basically too good to be true today. Something's fishy going on. So you always want to be careful when you don't know the underlying investment, you can't see audited financials, and the returns are much higher than you would get with traditional bond, stock, and real estate investments you make yourself. Thank you.